Hey, what's going on, guys? My name is Dr. Boyce Watkins, and I'm your friendly neighborhood finance professor. And I want to talk to you guys about some IPOs that you've asked me about this week. DoorDash and Airbnb in particular. DoorDash and Airbnb, those IPOs took place this week. And a lot of you saw my video the other day where I mentioned DoorDash in particular and Airbnb as being overpriced. Well, it turns out that the IPO overpricing trend is a national phenomenon. This is something that is occurring on a major basis, and it's allowing a lot of people to come in and get what I call suckers money. And we're going to break this down on the Black Financial Channel. So buckle your seatbelt, hit the thumbs up button. We're going to get started right now. Hey, what's going on, guys? My name is Dr. Boyce Watkins. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. And I want to talk to you about some of these IPOs that you've been watching. These IPOs are interesting. You've seen really record-setting numbers on the IPOs. Particularly, the biggest IPOs have been DoorDash and Airbnb, which have pretty much set the world on fire. And if you made money in these transactions, I'm really happy for you. But today I'm here to give you not so much bad news, but just kind of a warning about some bad news if you're not careful. This IPO market is on fire. In case you don't know what an IPO is, IPO stands for Initial Public Offering. And right now the IPO market is it's blowing up. It's going crazy. A ton of money's being made, and people are loving it. And this is not the first time this has happened. This has happened before. And usually an IPO market that's on fire like this one ends badly. It ends with a great big gigantic crash, a big bubble pop, and a lot of people lose a lot of money. Now, give me a yes or no. Give me a yes or no. Has anybody in here participated in the purchase or sale of Airbnb or DoorDash? DoorDash and Airbnb are the two most popular IPOs. Give me a yes or no if you jumped into either one of those transactions. Let me know what's going on with you. Okay. Hey, Jessica Hicks, I see you. Hey, Bilal. Jessica says, I never buy IPOs. I generally feel they are overpriced. Devin Luke says no. Okay. All right. So I see. Okay. Universe Trip says yes. Now, one of the things I mentioned about these IPOs and, not just Airbnb and DoorDash, but all the other IPOs that are out there is that you have an overpricing phenomenon generally that's always been in existence for, as long as IPOs have existed. IPOs tend to be overpriced. There tends to be a lot of hype, almost like a new relationship. You start dating somebody, typically they're going to be overpriced. Has anybody ever dated somebody and then you realize like you were dating a dud and you thought you had somebody, you had the good one, you run around telling your mama that you met the one. And then later on, like 6 weeks later, you're like, I got to try again. Well, IPOs are kind of like that too. IPOs hit the market, people are very excited, and then they realize later on that these IPOs are not as good as they appear to be. So with DoorDash and Airbnb in particular, you're really seeing something that is part of an IPO mania. Bloomberg just wrote an article about it today, and I wanted to talk to you guys about it just to make sure you're aware of what's going on and aware of the environment. So I'm looking here, and it says IPO mania creeps over Robinhood crowd and stokes a 111% rally. So there's a company called C3.ai, which I don't know much about that company, but that's another one of the IPOs that went crazy. They said mom and pop investors are helping to fuel the buying frenzy. An interesting thing keeps happening in the American stock market. Lately, when ownership of younger companies passes from institutions who nurtured them into the much broader arms of the investing public, their valuations double. So that means instantly, as soon as they go public, the valuations of these companies double. It happens fast. After its price was set with professional fund managers, the night before, food delivery service DoorDash surged 86% in its public debut Wednesday. Software firm C3AI Inc. jumped 120%. Airbnb more than doubled a day later, with the company now having a valuation of over $100 billion. While initial public offerings are often occasions of appreciation, this year has been different, with the first day rallies almost 3 times bigger than the average of the last 40 years. So pay attention. Listen to this. Are you listening? Give me a yes if you're hearing me. The initial public offerings are often occasions for appreciation. This year has been different, with first day rallies almost 3 times bigger than the average of the last 40 years. Do you hear that? That's kind of crazy. Bigger than the average for the last 40 years. While Federal Reserve stimulus may explain some of the frenzy, it's hard not to also consider who rules public exchanges these days. The Robinhood posse. Quote, there's no doubt that the emergence of a much larger cohort of retail investors / traders are moving markets, said Art Hogan, chief market strategist at National Securities Corp. There seems to be an entire subculture of people that sort of follow the same things, talk to each other on social media, and drive enthusiasm for individual issues. And sometimes it makes no fundamental sense to anybody. So basically, you got the Robinhood traders. Good for them. They're jumping in, they're piling in. They don't know what the fundamental value of a company is in many cases, so they just bid whatever they think. Whatever company they want to own, they buy that company, and then they rely on what is called the bigger fool theory. The bigger fool theory says that that there's always a bigger fool out there who is going to pay a higher price than I did, and as long as you do that, then you win. It becomes a game of musical chairs. Now, here's what happens though. You know how musical chairs always ends. Chairs ends when the music stops and there's not enough chairs for everybody, and somebody ends up without a chair. So, except instead of musical chairs, it's going to be musical money. Musical money. So, the music going to stop, and some people are going to make money, some people are going to lose money. And so, effectively, if you look throughout history, what has occurred whenever market valuations get this crazy, eventually the bubble pops. So you might say, hey, Dr. Boyce, okay, I love Airbnb and DoorDash. These are great companies. What are you saying, Boyce? Well, first of all, there's a difference between a great company and a great investment. That's the first thing you have to understand. Second of all, these companies were losing money. I mean, a lot of these companies, these IPOs that went public were not even profitable yet. What you're leaning on is an expectation of eventual profitability. What happens is this. It's like, think of it like a relationship where your daughter tells you that she's met the man of her dreams. And you say, sweetie, that's not the man of your dreams. And she says, no, daddy, you're just being mean. That's toxic masculinity is making you tell me that Tyrone really doesn't love me. And you're like, no, sweetie, I know guys like Tyrone. It doesn't end well. And she's like, no, you don't love me. You don't care about me. I love Tyrone. He's going to be with me forever. So then what you're really waiting for is you're waiting for time to pass by. Right? You're waiting. You're not waiting for the end of her life to figure out for her to figure out that Tyrone's a terrible guy. You just need little things to happen that will give her clues that Tyrone is not the Superman that she thought he was. Right? So maybe a week later, she sees Tyrone with another girl, and she's like, oh my God. She's crying because all her hopes and dreams for the future are now dead. She's having a funeral inside her head for all the beautiful things she thought Tyrone was gonna give her throughout her life. She thought they were gonna name their baby Tyrone Jr. and maybe have a girl and get a house with a white picket fence. Well, all those dreams are starting to die because she saw Tyrone with another girl. And then let's say later on, but you're like, sweetie, I told you Tyrone is not the guy for you. And she kind of gets it, but she still believes in Tyrone. Well, then let's say a month after that, Tyrone, she finds out Tyrone got another girl pregnant, right? Now she knows. Now she's crushed. Now Tyrone's stock has literally plummeted, right? It was up here in value. Now the stock in Tyrone has crashed, right? It's crashed because now she's starting to see she doesn't need to live the rest of her life. She doesn't need to spend 50 years with Tyrone to know that Tyrone's a bad guy. She just spent maybe 6 weeks, and it helped her understand that this ain't going nowhere. This guy is nothing. This is not a relationship worth investing in. Well, companies are like that too. So you meet these companies, DoorDash and Airbnb, and you get all pumped up and excited. You're all excited about the future of DoorDash. Like DoorDash is going to take over the world. They're going to make $1 trillion, whatever. And then what happens is you have little things that come along that prick the bubble, right? So DoorDash next year issues their earnings report. The market expects them to make this much money. They make that much money. Then it's like, oh man, this company isn't as great as we thought. And then little pieces of information come out about the company over time that slowly reduce the expectations of future earnings, where every time the experts are like, ooh, we thought DoorDash was good, but now all the analysts are saying you should sell DoorDash. Well, analysts' recommendations will affect what the institutional investors do. There are people that listen to analysts to figure out if a company is going to actually make money, right? So that might pull the price down even more. And then you might have some sort of shock to demand for DoorDash or Airbnb, where maybe, one day for whatever reason, because the economy is going south or because there's a war or because something crazy happens, politically, you can see the stock market as a whole start to drop and the demand for that stock to start to plummet, where people are starting to sell more than they're buying, right? Where sellers can't find buyers at the current price, and that starts pushing the market price down. Well, a lot of what drives the market as well is leverage. A lot of people have margin on their Robinhood accounts. So as the prices start going down, you start seeing margin calls come in where people have to either cough up cash or sell the stock. Well, they may not have any cash, so they have to sell the stock. So more and more selling pressure hits the stock, and next thing you know, DoorDash is starting to plummet and decline. And the analysts are like, look, the price is still too high. You got to keep it coming down. So all the money managers are selling. Even some of the Robinhood investors are selling because they have to, and nobody wants that stock. Well, the price is going to keep dropping until somebody catches it, right? And that's when you see these prices that decline in the market. Where the market prices come from is basically the highest prices someone's willing to pay for that stock right now, right? So basically, that's probably what's going to happen with these companies. I cannot imagine. There's been no time in human history, in the history of markets, where companies have been able to remain valued at this level. Now, does this mean that things can't change? No. I mean, the thing about a bubble that's interesting that led me to really meditate on this, I really thought about this a lot. I was talking to Alicia about it. And I said, I need to think about these bubble things and what's going on here, is because there's a almost philosophical argument about a bubble, to the point where it's like, think about your daughter and Tyrone, right? And Tyrone is as a crappy guy, right? And you know that Tyrone's bubble is going to burst. You know that the value of his stock is eventually going to plummet. Eventually, one day, your daughter will find out that your daughter, that she's picking the wrong man. Do you follow me? Do you follow my logic here? So Tyrone is the stock. That's the analogy I'm using. I like to use real life analogies. So let's say it goes different, right? Like what you're really relying on is that things are going to happen that will reveal Tyrone's true value. And because you know Tyrone's a sucker, you know he ain't worth nothing. So you're hoping that he's going to tell on himself, right? Little things are going to happen where your daughter's going to see those things. And each time his stock is going to drop until she realizes that he's a dud, right? Well, what if nothing happens? What if Tyrone, it covers his BS? And what if your daughter is just stupid? Like, what if your daughter is blind? Because, love makes us blind and stupid. Love is the same thing that drives people to overvalue a stock for long periods of time. Sometimes we just don't want to see the truth. Anybody ever go through that when you have a relationship and you just don't want to see the truth? So what if your daughter isn't good at understanding stupid behavior? And let's say that Tyrone covers his stuff up really good. Well, it may take 20 years for her to realize Tyrone's a sucker. So Tyrone may be like that inflated stock that stays as a bubble for 20 years or for 10 years or whatever. The thing about it is this: look, as long as somebody's willing to pay that insane price, then that price could remain for a very long time. Like, so for example, a Gucci belt, people will pay what, $400, $500 for a Gucci belt. We all know a Gucci belt is not worth $500, but people will always pay for $500 for a Gucci belt. Right? Until one day somebody says this is stupid. And then everybody realizes that Gucci belts are dumb and Gucci belts are out of style. And so no one pays $500 for a Gucci belt anymore. And then Gucci has to sell something else. So my thought is, why can't stocks be valued like a Gucci belt? Like, why can't stocks just, be valued at an inflated level for, indefinite periods of time? Particularly since you have a stock market a Federal Reserve that will pump up the prices of stocks whenever there's a crash, right? The Federal Reserve pops in and they start buying assets and they start putting buy pressure on the market, which keeps prices inflated. So I'm really curious to see how this plays out. History says that this is going to end badly. History says this never ends well. But really, if you think about the market now, the Fed's intervention in terms of covering up market bad behavior or propping up zombie companies through Fed action and intervention is a little bit like, again, like your daughter dating Tyrone. And the minute she sees that Tyrone's a terrible man, she's going to realize that. But it's like imagining if every time Tyrone did something stupid, somebody covered it up for him, or somebody told a lie for him, or somebody protected him, right? So the stock market gets protected where we don't necessarily see true fundamental values. Like right now in the pandemic, one of the biggest things that's happened in the pandemic is a lot of zombie companies got propped up with PPP loans. They got propped up with stimulus packages, things like that. And so that's where you got to be careful in terms of just believing that DoorDash is definitely going to plummet. But if you want to know where I stand, I haven't bought any DoorDash. I bought no AirBNB. I would never, ever pay at that price. In fact, the price I was willing to go in on Airbnb with was literally maybe about, I want to say $70 a share less than the current price right now. So if you want to know if I'm into it, the answer is no. Do me a favor, hit the thumbs up button, hit the share button, hit the subscribe button. The Black Wealth Bootcamp starts on January 7th. That is a 6-week masterclass that I teach that's extremely popular. We cover everything you need to reduce your dependence on the corporate plantation. It's extremely good. It has a money-back guarantee. You can get 30% off as an early bird discount up until the end of this week. So feel free to go to blackwealthbootcamp.com. The URL is right there on the screen. Feel free to go take a look at blackwealthbootcamp.com. All right, so and hit the thumbs up button. Please hit the thumbs up button. We make you better on this platform, and we're building Black media. We could really use your help. Okay, so here's what else the article says that's really interesting. This is in Bloomberg, and they're talking about the IPOs and what's going on with the IPOs. So they said the number of searches for IPOs on Google spiked to its highest level in at least 16 years. Meanwhile, investors poured a record amount of cash into an exchange-traded fund tracking newly public companies. And a post on Reddit's Wall Street Bets forum read 220,000 into Airbnb. See you in Valhalla. I guess that's like heaven for white people or something, or the Vikings, or I don't know. The average first-day return for operating company IPOs was 41% in 2020. Among 50 companies that have been backed by private equity that went public this year, their total worth jumped 660% on the first day of trading from levels indicated in their latest round of private funding. Pricing versus promise. Consider Airbnb now with a market cap of around 100 billion. Airbnb's value is now 5 times as high as its worth was during its last private funding round. There's reasons institutions such as venture capital firms and private equity investors might have different views than the masses on the valuation of these companies these days, as well as the investment bankers who set the IPO price. So some investors are deciding to hold based on fundamental analysis, trying to figure out how much Airbnb is really worth, said Jay Ritter. Jay Ritter is a guy, I used to read his articles in graduate school. He's a University of Florida, I believe, and he's really good with IPOs. And others are paying attention to that, but also playing momentum strategies. They might say, I think they're overvalued, but I believe that I believe in the greater fool theory. I think it's going up even higher, and I can sell my shares by waiting to sell to a greater fool later on. So basically, they're hoping that you're silly enough to not know what the true value is, right? Let's keep going. So long story short, when they look at history, when you look at the history of market crashes, you'll find that a lot of market crashes basically came at times where reality smacked into the face of your fantasy, right? Again, like you believe in Tyrone, you believe he's a great guy because you just believe it. There's no evidence to support the fact that he's a great guy for you to date, but your daughter wants to date him anyway because she just believes he's great because he talks a good game. Well, over time, information comes out. The number one thing that moves stock prices is information. So as you're getting more information about Tyrone and she sees him on a day-to-day basis, she slowly but surely realizes that he's not the man that she thought that he was. Now, the problem with overvaluation is I also think about poker. I like the game of poker. And one interesting thing about poker is that poker is a game where the best poker players know how to beat you, even if they don't have better cards than you, right? They don't really actually have to show their cards in order to beat you. All they have to do is convince you that they have better cards than you do, and you fold. And then when they fold, nobody's cards get shown. So really, deep down, the emperor had no clothes, but the emperor pretended that he was well-dressed and tricked you into folding. So he wins because you folded, not because he actually won or had better cards. Well, so the key idea here is that as long as the cards never get shown, then sometimes people can hold their bluff, right? So with these companies, you're seeing a big bluff. You're seeing a big, gigantic macroeconomic bluff where these companies are pretending to be worth the astronomical valuations that they claim to be worth. The experts are saying, no way, this is crazy, but people don't know. They just think, oh, well, Airbnb is a great company, so it must be worth $100 billion, right? Well, this can be true unless there's a point of reckoning where information and reality smacks in the face. And the truth of the matter is that when you own a stock could be overvalued for 50 or 100 years, as long as people are willing to pay that price. Even if the company's assets are in market value and true market cap don't match the publicly traded market cap, you can hold on to the illusion forever. Really, like your daughter could marry Tyrone, and as long as she never asks any questions and he never tells any of his secrets and never lets his stuff out the bag, they might be married for 50 years, and he may die without her ever knowing that she married a terrible man, right? But the question becomes, at what point and in what way does that information get revealed? And so with Airbnb, there's no point where Airbnb is like going to be liquidated, where you actually have to really truly see what the value of your assets are. You could kind of play this game forever because sometimes market prices detach from the realistic fundamental value. And this is what's interesting. I don't think that's going to happen. History says it's not going to happen. History says that at some point the bubble's going to pop. At some point, there's going to be some selling pressure. At some point, there's going to be a rush on the stock. At some point, the economy is going to have some trouble. At some point, they're going to issue a bad earnings announcement. At some point, negative information is going to come out that's going to reduce the earnings expectations for those companies. At some point, inflation is going to get high and reduce stock valuations. At some point, something's going to happen that's going to push you closer to reality. And that's when all the people that are buying at that price are going to get their butts kicked. But then again, it may never occur. I hope it doesn't happen to you if you are a holder of that stock. I would just encourage you to be careful. You may want to consider some stock options in order to protect your investment because it could get messy. Okay. So anyway, since you were asking about stock options earlier, we do have a masterclass I did on stock options that's really good in the Black Business School. So feel free to go to stockoptionsmasterclass.com if you'd like to see a recording. That's stockoptionsmasterclass.com. And also, last but not least, I want to mention to you guys, if you're interested in real estate should be a part of your portfolio. You shouldn't just invest in stocks. That's very risky to have all your money in stocks. So real estate is a great way to expand fan. So we're having the Black Real Estate Weekend where we're bringing real estate experts from all walks of life, everything from buying your first home to buying your first rental property to buying commercial property to becoming a real estate agent to tax lien selling, everything. So so you can join us because you're here, and I'm giving you this link. It's totally free. So come on in. It does have a fee. The price is $2.99, but you go right now. Because you're watching this podcast, you can get in totally for free. We will let you in for free. It's on the weekend of the 29th. You're going to love it. So feel free to join us. All right, guys, I'm out of here. Have a good day. And I hope that your investments, if you made investments in Airbnb and DoorDash, I hope they go well. My only thought is maybe you want to protect yourself because it reminds me of the crypto market in 2017 where prices got super inflated and people had no protection. A lot of people lost a lot of money. It was a bloodbath. I don't want that to happen to you. So take care. Here, guys, have a good day. And it was great talking to you. I'll talk to you later. Peace.